Dan McDermott joins me now from thechartguys.com. Dan, welcome back.
Thanks, James. Glad to be back.
Dan, what are you seeing in the marketplace today? It looks like a bit of a sell-off underway.
So the S&P 500 the last 2 days has been a bit weak, and of course the weaker we are, where we stand in time right now, the more the narrative of the coronavirus is going to be talked about by the talking heads, and that's just going to propel some fear. So essentially the marijuana sector reached a point where CGC had its earnings, and it started to pull back a bit, profit taking on a gap up open, some shorts saying, oh, the sector's been weak, we can just jump in again. We reached a point where after a few days of a slow pullback, we reached a bottom base, and the bulls showed up yesterday in a big way. We were up at one point for CGC 6%, other names 4 to 5%, and then right in the middle of that bull momentum, the S&P 500 dropped pretty much 1% almost in a half an hour span, just an all-out little waterfall dump, which eventually recovered, but that was enough to pretty much stop in its tracks the bull momentum that the MJ sector was seeing for the first time in quite a long time. So just poor timing for the sector. And right now I'm looking at a sea of red out there because the S&P 500 is down 0.9% again. So just can't catch a break for the sector bulls.
Right. And so how much of that do you think is related to the coronavirus? I know you're not really that interested in the fundamental picture, but there must be some sort of influence on your thinking by the continuing spread of the disease.
Definitely, it's a factor. I'm not going to say it's not a reason for anything. It definitely is. It's the kind of thing where if coronavirus weren't a thing right now and the same price action were going on right now, they would point to the Democratic debate and they'd say, Bernie or Elizabeth Warren perform better than Mike Bloomberg. So the market is responding to the potential. There's always going to be a fundamental narrative that they tie to price action.
Right.
But I personally am paying a little bit more attention to the coronavirus, and I actually just did my prepper thing and bought a whole bunch of dried food and some medicine and just upped my game a little bit more just in case. Why not prepare? So we're getting some numbers out of China. I saw one about the first half of February. Car sales are down 97% year over year. So it's definitely going to have an impact. And the fact that the S&P 500 has been at all-time highs while this is going on, it seems like a little bit of a detachment between the reality of things and the price of things.
Mm-hmm. Well said. Well said. Is there anything in your technical sort of indicators to suggest that the coronavirus could, in fact, catalyze a really steep global recession?
I would say yes. Just the fact that the S&P 500 right now, since the dump December 2018, it's been in a weekly uptrend for pretty much a year and 2 months. So 14 months of a weekly uptrend. We're due to lose that weekly uptrend at some point in the near-term future, in my opinion. Whether it's 1 month from now or 3 months from now, I don't know. I'm not going to try and pinpoint the top. But I am in a bearish S&P 500 position currently with a stop loss set just in case this is that more meaningful pullback that we have not seen in the last 14 months. So we're so overextended. It's the kind of thing where I'm not going to fight the market bulls. I'm not going to fight the Fed pumping money in, but I'm going to position myself in low risk spots where if this is the one, I'll make some good money. And if it's not, I'll have a small loss.
Right. Okay. And so, what kind of other assets do you look at when you see this kind of a sort of extreme volatility materialize around what looks like a geopolitical event of some magnitude?
So gold, I've been in a long-term gold position for 2 months now, which is really long for me. I haven't held anything for 2 months in a long time. But the fact, I can't tell you how many times in the past 2 months I have said gold's positioning with the strength in the dollar and the strength in the S&P 500 is putting it in a very good position. And then from there, we had a little bit of Iran scare, and then we saw gold move up. And then the same thing, and we had a little bit of coronavirus scare, and gold moved up. And then yesterday, a little bit of market weakness, and gold's hitting multiple year highs. So we're definitely noticing, okay, gold's going up, and it's not the normal inverse correlation reasons. It's almost like people are preparing for a market pullback before there's any signs of a market pullback and treating it as a safe haven asset to a certain degree.
Right. Okay, so do you expect the volatility to continue into the near term, or do you expect it to sort of relax a bit, or is it too hard to tell based on what might yet be headline sort of catalysts?
It's definitely going to be looking like some short-term volatility is going to be here. What the bears are showing us is they can push the price down really fast and hard really quickly. It's almost like they catch the bulls off guard. And then yesterday it lasted 30 minutes, and we had a bull grind the next 3 hours to the end of the day. This morning, it was 20 minutes of a flush, and now we're having this slow grind recovery. So we're not really getting meaningful follow through. I want some clear lower highs and lower lows on the hourly, on the daily time frame to prove follow through. The burden of proof will be on the bears in this market as long as we are in a weekly uptrend, and just not seeing the notable follow through. I mean, when's the last time we've seen in the S&P 500 2 or 3 red days in a row? It's been a long time. So we have to see that kind of follow through for us to say, okay, the market cycle is shifting a bit. The bears are showing us something that they haven't shown us in months, and that's going to get a lot of attention if that happens. The question is, will it happen?
You bet. All right, Dan, let's take a look at the charts and see if they can bear out what you're telling us.
So checking in first to the S&P 500, we can see we leveled out a little bit, sideways trading, and they're pulling back the past couple days. The long lower wick yesterday shows us, yes, we dipped hard, but the bulls bought that dip. And today we did drop to a lower low, no notable bear follow through yet, and the bulls trying to see another lower wick, showing the bulls buying the dip. So the most important time frame for me, as I talked about, is the weekly chart. This weekly bounce from the low of end of 2018 was a V-shaped rocket ship, and the most important higher lows from there were right there, another here, and every time those dips were happening, we were saying as long as the weekly uptrend remains intact, this is a buy the dip scenario. Well, here we are with the last weekly higher low at 320.73. So as long as 320.73 on SPY holds, this weekly uptrend remains intact and it keeps the bulls in complete control. So with where we stand right now, we still have about 4% that we could pull back while maintaining the weekly uptrend. So if you want to see a notable longer term shift in the momentum away from the bulls that we've been seeing for 14 months, have to lose the weekly uptrend. And there's still a bit of cushion for the bulls to work with for now. Onto gold, we can see gold breaking out. So we look longer term timeframes, the weekly chart has just been a beast over the last couple of months. Let's go to the monthly chart and really condense things down. We're making our way back up through an area with limited resistance, and we are looking back towards that all-time high. That all-time high is still roughly 18% away, but some really nice momentum for the last couple of years in gold, and looking for that to continue. I'm using the weekly time frame as my guide on gold, walking up my stop loss with every weekly higher low. And last, to wrap it up with the MJ sector. So this is what I'm talking about with the earnings gap up, profit taking from the bulls, bears jumping on things, weekday, the next day, weekday, the next day, volume dropping off, slowly running out of selling pressure. And then yesterday the bulls said, okay, we're done. It's time to show up. Big day and a big upper wick, giving it back. And now we're looking towards the lows here because of market conditions. So bulls were real close to shifting momentum in their favor, but bad timing. So the entire sector is still at the mercy of the S&P 500 to a certain degree, and timing does matter. I personally am taking the viewpoint in the MJ sector where if there's short-term clear trades that stand out to me, I will take them, but otherwise I am looking at time frame and seasonality as the most important factor. If we get towards the summer and nothing notable has happened with major news or major volume, then I'll start paying attention later summer as we start to approach the fall and election season.
Dan, thanks for joining us again. If you want to see more about Dan McDermott, go to thechartguys.com. We'll see you next week, Dan.
Thanks, James. See you then.